Hey, it's Nero here from Investment Rise, and I bet you've heard this before. Property investing is a long-term game. The way to build wealth through property is to buy and hold for as long as possible and never ever sell, if that's doable for you. And although there's a lot of merit in that argument, consider what's happened in the Perth market. There are many areas of Perth where people who bought in 2008, the price and value of their properties today in 2018 is only about what they paid for it, and in many suburbs actually worth less. And that was 10 years ago. So how long is a long term? I mean, imagine holding a property or buying a property today and holding it for 10 years and having it worth only about as what you paid for it, and in worst case, even less. What would that do for your financial goals? How would you be able to tap into equity? Because there wouldn't be any, because the price wouldn't have risen. So the major issue I have with people who say, oh, property investing is a long-term game, is many people get lazy. You see, because I believe in fact, there's only 2 times that you should ever buy property. And the types of markets that you should buy in are, number one, it's a flat market that's going flat with some potential for future growth, or an already rising market. All right, so consider now the various cities. Like, for example, is Sydney a rising market? No. Is it a flat market? Some suburbs are, but many suburbs are actually falling. In fact, a recent study identified 17 danger suburbs in Sydney, quality suburbs like Homebush, Parramatta, Wentworth Point. Right, suburbs where people expect that if they buy property now, it'll actually be worth less at least in the short term because of the direction of prices. So why would you want to buy in a market where prices are falling? That doesn't make sense to me. People say, oh, look, property's long-term game, and sure, look, the Sydney market will come right again. Yes, Melbourne will come right again. I mean, for example, in the GFC, Melbourne prices fell 8.33%, but obviously they've risen far more than that since then. But the question is, why would you buy in a market when you know prices are falling? When you know that people are struggling with their mortgages, interest rates are about to rise, which is going to make affordability even tougher when rents are falling. It doesn't make sense to me, because sure, you will come right over the next maybe 10, 15 years, but what's your time frame? What's long term for you? You don't want to be in the position like people are in Perth where they bought 10 years ago. Long-term investment, yet 10 years later, they're still holding on, hoping for that next growth wave. And although the Perth market is starting to show some signs of recovery, there's still a long way to go. So my recommendation is always, when you're looking to buy an investment property, when you're entering a market, ensure that you've done your research and that you're confident that it's either a growing market, like what Sydney and Melbourne have been over the last few years, or maybe it's dropped off its peak, it's gone flat, and now it's getting ready for its next rise in growth. Because that way you can keep buying properties that hold their value, rise in value, continue to give you better equity gain, so you can start building wealth. Because remember, the whole point of buying property, to keep it very simple, is to build your wealth. And I still don't know anybody who's been able to create wealth buying property in a falling market. Sure, they may have come right in the end, because yes, property is a very forgiving asset, but why don't you give yourself the best chance of a head start from the beginning? Why not instead identify markets with great growth potential that are not falling in value, that are looking to begin their next growth curve, or markets that are already rising, therefore giving yourself the best chance to keep tapping into equity, building a portfolio that can then fund your future wealth creation goals, fund your retirement, help you leave something for your children, whatever your goals are. Make sure you are not falling for the trap that, oh, property is a long-term game, so I'll just buy anything at any time. There are plenty of people out there who've done that and are now regretting their investment decision. So please do your due diligence, especially in these changing market environments that we've got, as in the middle of 2018 with APRA forcing banks to tighten lending regulations, so affordability is becoming tougher, with interest rates on the verge of rising. In fact, many banks are already increasing the interest rates outside of the Reserve Bank of Australia movement. So we're in a very different time. So yes, there's some great potential and great opportunities. I'm very excited as a property investor because I think now you're going to have to be more strategic. You're going to have to do your research. You can't just speculate and buy anything thinking you're going to make money. But if you do your due diligence, if you identify rising markets and then hold for the long term, you are then on course to well and truly achieve and make progress towards your financial goals. I really hope that helps. Let me know what you think about holding property for the long term. I'd love to hear from you in the comments field below. Bye for now.